China Uncensored. China's stock markets are melting, and Chinese leaders are panicking. Hello and welcome to China Uncensored. I'm your host, Chris Chappell. You know what I love? A good stir fry. No, not that kind. This kind. In China, people call investing in the stock market "chao gu piao," literally stir-frying stocks. Okay, so it doesn't actually mean investing. It means trading. It has a get-rich-quick connotation. And what's not to love about getting rich quickly? Yes, it seems everyone and their grandmother has tossed their hard-earned bacon into the stir-fry lately. And that's all well and good, while China's stock markets look like this. But not so much so once they start doing this. Even movie star Zhang Ziyi didn't see this hidden dragon coming. She and her family lost $75 million in Chinese stock value in a matter of weeks. Since June 12th, China's two big stock markets have plummeted. The main stock market, the Shanghai Composite, has fallen more than 30% as of July 8th. The Shenzhen market, sometimes referred to as China's Nasdaq, dropped 41%. Even during America's financial crisis of 2008, the U.S. stock market didn't drop by that much in a single month. But it's hard to compare a stock market that's been around since 1817, before the first commercial railroad, with ones that have only been around since 1990, after the invention of the cell phone. And that's also part of the problem. China's stock markets are fundamentally different than other countries in a lot of ways, in terms of who puts money in, what their expectations are, and how they behave in a panic. Speaking of panicking, that's exactly what the Chinese Communist Party seems to be doing right now. They've stepped in with a heavier hand than most other nations would dream of using. For more on this, I'm joined by China Uncensored's economics copy editor, Shelley Zhang. Shelley, how did we get to this point?
Well, Chris, the Chinese Communist Party was worried about an overheated real estate market. So over the past year, they've been telling people to invest money in the stock markets instead. They had state-run media say things like, it's a super bull market, and encouraging huge amounts of investor confidence.
That sounds like Super Bowl to me.
But it worked. For people, this was like the party promising that the markets would go up. Millions of people opened new trading accounts, and by June of this year, the value of the Shanghai market alone had more than doubled.
So why has it been plummeting so fast since then?
Well, the Chinese stock market has been going through a lot of volatility, which is what financial analysts say when they mean people are panicking. In the U.S., most investors in stock markets are institutional investors. We're talking Merrill Lynch, Morgan Stanley, huge organizations with lots of money who employ hundreds of people to invest in the markets. But in China, 80% of investors in the stock market are individuals, retirees, workers, just regular people. And a lot of them have borrowed money to buy stocks, what we call margin trading. And like you said earlier, they're not investing for the long run, they're stir-frying, looking for huge short-term returns. So when the market started to fall a little bit, people panicked and sold more, setting off a chain reaction.
So what you're saying is people got kung-paoed by the market and turned chicken. Too much?
Slightly.
Anyway, this can't be good for the Chinese government. What are Chinese leaders doing to try and save the stock market?
What aren't they doing is more like it. The central bank is pumping money into the markets any way they can. They're loaning money to big institutional investors to get them to buy more stocks, and they're even, in some cases, stopping large shareholders from selling their stocks for 6 months. And the whole margin trading thing, where people borrow money to buy stocks that helped get them into this mess in the first place, while the government actually is encouraging people to borrow more money now because they're so desperate to get them to bring prices back up.
Well, that sounds like a solid long-term plan. How could it fail?
Well, you're right, because the government's methods may be backfiring in a way. The more the government is doing, the more scared investors are getting, which means they're still selling. So much depends on investor confidence, aka how people feel about the risks of the market. And if they don't trust that the government can stop the market from falling more, they're not going to buy. And it doesn't help when Communist Party mouthpiece Xinhua publishes articles like capable and confident in maintaining a stable capital market. And the People's Daily writes this gem, rainbows always appear after rains.
That's so uplifting. How bad is this going to be?
The Chinese markets have lost more than $3 trillion since the sell-off began, which is significant but may not have a huge impact on the overall economy, since only 14% of Chinese citizens have invested in the markets. I think that recently a lot of savvy investors could see that this was a huge bubble that would eventually burst. But for new, inexperienced investors, it was like they were putting all their money in those scratch-off lottery tickets, and they were guaranteed to win, until suddenly they weren't. So for those individual investors, it's been a tragedy. Most of them aren't movie stars. People have had their savings wiped out. And for people who borrowed more to invest, it was even worse.
What about Americans? What does this mean for us?
Well, because the Chinese stock markets are so isolated, it's probably not going to affect the other markets as much. But the Chinese government is weakening the Chinese currency in response, and that's the opposite of what most American companies want. Also, when Chinese people lose money, they're less likely to do things like buy American goods or travel to the US. Just here in New York last year, visitors from Beijing spent $1.4 billion. If falling stock prices make Chinese spending go down, that could mean less money spent here in the US. But of course, it's hard to say how big that ripple effect is going to be. But here's the big change. For a long time, a lot of Americans looked to how the Chinese government handled the huge growth of its economy and thought, wow, they're doing it so well over there. And if things go badly, the government just has the power to step in and fix it. Investing in China seemed like it was practically no risk because the Chinese leadership would always be able to control the outcome. Well, people aren't thinking that way anymore, which at least means they're less likely to get egg-rolled by the Chinese markets. Chris?
Thanks, Shelley. So, what do you think about what's happening with the Chinese stock market? Leave your comments below and be sure to click that subscribe button for more China Uncensored goodness. I'm Chris Chappell. See you next time. But move over, girls, because there's a new band in town. 56 Flowers, a girl group with 56 singers. The band concept came from a patriotic song that goes, 56 nations, 56 flowers, 56 brothers and sisters are one family. Referring, of course, to China's 56 happy ethnic minority groups. Hey, Felicia, you want to call an Uber?
What about 滴滴快递?
I have no idea what you just said.